Hello and welcome. This is Brandon Wendell, and I'm going to go through some of the equity futures market analysis. And we're going to start off here. Actually, before we get on the individual securities, I want to go back over to my comparison chart here. And the reason why I bring this up is we started with the big rally really on the 13th of October. So you see, I've got the study started out there. And what I want to see is which market is leading us in whichever direction we're traveling. We're obviously traveling up, and the momentum is really being carried by the Nasdaq right here. You see that as the strongest market to the upside, followed by the Russell, the S&P, and then the Dow is lagging. So literally, like that's a rock being attached to a helium balloon, being pulled upwards. But if this balloon pops, then everything should be able to fall. So we want to kind of focus on the NASDAQ to see, since it's leading, where is it going to take us and when is it turning around? So starting there with the NASDAQ, I'll go to the weekly chart and we can see we've got a lot of movement to the upside. We've made some fresh highs, but there is one troubling thing. As we're making this new high, the momentum just isn't there. You can see that we're seeing some weakness. What we have called is called a negative divergence. It's not confirmed yet, though, because we did not actually make a peak here yet. So we need to actually put in a high with lower highs and lower lows on either side, and that'll be official for the divergence. But this is a troubling sign and signs of weakness potentially in the markets there. We could actually confirm this if we looked at other securities or other indicators as well, but I'll let you do that. Anyway, looking down at the daily chart, we can still see the bullish momentum, very strong to the upside here, but there's a topping tail on this candle, which indicates selling pressure. So this could be kind of an inverted hammer or shooting star. Really, the shooting star would be gapping up, but that's a bearish sign. So if we break the low of that candle, that would confirm the bearishness as long as we don't make a new high first. So watch for the 16,292 level. If that's breached, then we'll probably get a bit of a retracement. And I don't really have a good demand zone that we could push back to as far as our retracement area. This would probably be the first target, the 15,463. Yeah, rally, base, rally, but it's not a very good zone. Stronger zones way down at the bottom, looking at 764. Actually, I should probably go wick to wick there. 795. So 14,795. Dropping down to a 4-hour time frame. Now we can see there's also a little zone right here. Rally, base, and rally, although you could consider all that to be basing, is still zone to contend with here at 997, so just under 16,000. You can start to see a little bit of weakness coming in with those red candles, but the troubling thing on this time frame for the 4-hour is definitely the divergence. And this one is confirmed because you did make a lower high and lower low on price afterwards. So when the momentum is not following the same direction that the price trend is doing, that's a warning sign. And you can see that we lost momentum. We should get a bit of a pullback. Question is, how far back are we going to pull back? And could be to this demand zone, or we could stall shy of that. I'm going to put in a Fibonacci retracement and take a look at these retracement values here. So looking at the retracement, it doesn't mean much on this time frame. I want to see if it lines up with zones on the smaller time frame. Although there is, yeah, it looks like rally, base, rally right there as well on the 4-hour. So we'll kind of hone in on that. And you can see we got Fibonacci and the zone kind of in the same area there. But let's go down to the 60-minute time frame. And on the 60-minute time frame, the trend is definitely getting weaker. Once again, we saw the divergence occur where we made lower highs on the indicator showing lack of momentum as price was trying to make some new highs here. So when you see that, that usually leads to exactly what you're seeing, this pullback. And this was that daily low. I'm going to go ahead and delete that for right now. As we look back for a zone, we don't really have a good zone right in here. Oh, wait. Yes, we do. Take that back. We do have the green candles leg in, base, 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 base. The leg out, though, the leg out goes below the basing. So I've seen these work, but they're not my favorite types of zones. The fact that we do have that 50% retracement, 16,208, right above that area of 16,202, leads me to believe that that's probably our retracement target. So as we continue to pull back, there may be an opportunity on Sunday evening or even Monday morning if we come into, it'll probably be these highs. It'll drop, base, drop, supply. I'm not sure if that's going to be the area we turn. We may have already turned from this area. But if we continue to push down, I just don't have a good entry here. I'd probably look at a different security for the entry. I would say that we should be able to push down towards the 16,208 before we see another bounce in price. But I'm not bearish on the security by any means long term. This is just simply a correction as of right now. Going over to the ES, I'll start off with the big picture there. Sorry, the video got cut off, so I'm starting again here. I'll stream them together. But anyway, looking at the ES, we have the same picture. Basically, you've got prices moving very strong to the upside. However, we are losing a lot of momentum, as you can see, and we should be making more momentum to go higher, not less momentum to go higher. So that's the divergence waiting to happen and possibly a correction coming. We'll go down to the daily time frame. And on the daily, let me clear my drawings. There we go. We do have daily demand, pretty much the same as we did on the NASDAQ down here, about 43.6475. And you could argue, actually, there's a zone right here where we have base rally at 45.65 and a quarter. So we'll see where we end up pulling back to as we're looking like we're going to start seeing a little bit of retracement going on. If I go ahead and draw a Fibonacci retracement for the overall upward move that we've been experiencing, let's see where we come back to. Oh, look at that. That Fibonacci 38.2 is dead on for the zone. So that's a pretty good target. You got correlation between two independent analysis techniques. So that correlation can be pretty strong. Going down to a smaller time frame, we actually, on the 4-hour chart, see that we have an area of demand also at a Fibonacci level at the 38.2% retracement value. Sorry, the 23.6 retracement value. Oops, what happened there? Zones, there we go. As you can see, that was from the daily retracement of 23.6. We also run in at 46.2150, a 4-hour zone. So that's your first target. The secondary target would be 45.65. You're going to try to play the counter trend move to the downside. So trying to figure out an entry here, we'll drop down to the 60-minute time frame. Oh, before I do, let's go back again to the 4-hour for a moment. Momentum still looks strong. So nothing but a correction going on here, a little pullback, not a very strong one is what I'm expecting. On the hourly, we don't have any kind of a zone to be able to use to get in. We do see that we are definitely still bullish, but there's some warning signs here for the trend. One of the warning signs is we just try to make a little peak right there. However, the RSI stayed well below 60. For the RSI to stay below 60, it shows that bearish momentum is building up, and then we're losing our bullish momentum that took us higher. So the 60-minute trend is looking a little weak. We could get a nice little pullback there. And what we can do is drop this down to a 15-minute chart to see if there are any entry points, and there are. So if we start rallying a little bit on Sunday or Monday, we do see that this area is a supply. We have drop, base, and a good drop out of that area. We can look for that as a possible short opportunity for a counter trend play down to those areas of demand I mentioned on the higher time frames, 46.21 and then 45.65. Now, one thing I have to put in as a kind of a caveat is that we do not want to see the RSI above 60 when that comes into the area supply. If we're above 60, do not take the short because we have too much bullish momentum. We should break through that area supply. As we come down, we may stumble a little bit because there is, let's see, not there. And we got a little bit of demand possibly right here. Lots of basing in that area, so I don't imagine it to hold well, but we might bump or just bounce a little bit in the 44.6475. That's the 15-minute demand. You see we had a nice little explosive move up that took out a couple prior highs. It wasn't the best move because it didn't take out this high. We pulled back before that. And then the next, we're weighing down there. So that's what I'm seeing right now for the ES. It's a better short opportunity than the NASDAQ was. Plus, it's also weaker than the NASDAQ was. So for a counter trend play, you have a possible shorting opportunity, 46.9850, 47.02. Target 1 above the 46.64, target 2 above the 46.20. Let's go on to the Dow and see what's going on there. Start off again with a big picture. The weekly chart is not showing divergence. We actually have a little bit higher high on the RSI, so the momentum's still pretty good there. We drop down to a daily chart. And on the daily chart, still seeing lots of bullish momentum, but the topping tail on the candle is definitely a warning sign of weakness. If you're looking for your first daily demand, it's down here really, although it's not a very strong move up out of this zone, but you have rally, base, and rally right there too. But the 34.343 is definitely stronger with the buying pressure. It came out, broke out of a bunch of highs. This, it's okay, but not great. So we'll go down to the 240. And we still have good bullish momentum here. So the trend is still very strong to the upside, it appears. No signs of weakness other than we pulled back quite deeply on this candle. But other than that, there's really not much showing here, which is a bit unusual because this was the weakest market. So it just didn't climb as much, but it didn't show any kind of signs of weakness per se. We can take this down to a 60-minute time frame. And same thing, we just see strength here. Even this high, it's not like the S&P. The S&P made this high and could not get above 60 on the RSI. This obviously did. So there's still a lot of bullish pressure here in the Dow, even though it's the weakest market. I wouldn't bet against it necessarily, even if the market's turned to the downside. On the 60-minute time frame, we do have an area of demand right here, and you could possibly even claim the basing below that, but there's quite a few candles in that basing. So I'd hesitate to call that a good zone. As a matter of fact, I won't even mark it. So if we do drop, there's another zone, the origin of this rally here. And I think the S&P still provides the best opportunity for an intraday counter trend trade. The Dow, as you can see, has already hit its supply zone right there. And we were below 60, so we reacted. That means that we should continue to move down and break this prior low. That was also a tested zone as well on the 15 minutes. There's the 60-minute zone below. So unfortunately, I don't have an entry point here for the Dow. I'll be watching, though. If this turns into a drop-based drop, depending on how we open on Sunday and going into Monday, this might become a shorting opportunity there as well, with your target the 36,035 for number one and target two, 35,736. So we don't have any zones right now, but if we form a new zone, again, we would have to see some good movement to the downside here. This could become a zone, but it's not yet. Finally, we'll go over to the Russell 2000, and looking at the Russell, again, go to the big picture first, work our way down. Again, we got cut off there on the video. So again, we broke out of this move, but the question is it legit or is it going to become a false breakout and shake everybody out? Because we've been waiting for that for so long. So we'll just have to watch and see. The weekly doesn't give us any clue. And the reason why is we've got plenty of momentum still to the upside. I dropped down to the daily time frame, and that isn't helping us either, showing it's a lot of strength. We were interrupted with a little bit of selling pressure on these candles, so we might get a retracement back, but I'm not seeing anything telling us that we're going to reverse at this point. And let's see. Oh, we don't have a good zone here. We have drop, base, but oh, maybe that does close inside. Let me see. 95.3, the high here. Yep, so this is a zone. So here's your daily zone. If we do pull back, basically 2,300. That's what we're looking at as a pullback target. So if we do retrace, again, I can also put in the Fibonacci retracement values. You'll notice with the retracements, I don't start at the beginning of the move. I start at the open of the candle that gave us the move up. So a little bit of a difference there, but it seems to work out a little more effectively when I'm using the Fibonacci's. So we'll drop down to the 4-hour time frame. And what I want to look for is to see, do these line up with any kind of zones? Because if they do, then it's a higher probability for where it's going to turn. And this is not a good zone at 23.6, although we did have good buying pressure coming out. The next area we look at is too much basing here at the 50%. So really, there's nothing as far as a quality zone of demand on this smaller time frame until you come all the way back down here. And that's the 78.6 retracement value. So I don't really have anything on this as far as an opportunity to get in. We'll take a look on the smaller time frame, see if there's anything there. Again, you can see we got this sideways basing. Would probably, because there's such strong buying pressure, we may bounce at the 23.6 area. The momentum is still very strong here. Even that high is above 60. So I'm not seeing any weakness. I still think the S&P is the best counter trend opportunity if we start seeing that weakness on the NASDAQ. Drop down to a 15-minute time frame, and we've already hit our zone. You can see that on Friday we had formed drop-based drop and hit that. So we should be able to make fresh lows. We didn't have enough momentum to break through the zone. I'm still thinking we're heading down to the 23.6. I just don't have an entry point for us. So as far as the shorting opportunity, I would look for the S&P for the counter trend play. And then the NASDAQ, as you know, and also even the Dow were pretty bullish. So when they pull back to those areas of demand, you could possibly buy those to join the overall long-term trend to the upside. That's what I see for this week on the equity markets. Until next time, take care, trade safe, and trade well.